Huge news just dropped. Trump might actually trigger a global financial crisis this time. Oil is skyrocketing, dragging down US futures and nuking Japanese and Korean equities. I've been seeing a narrative going around that the real crisis hasn't even hit yet. If the Strait of Hormuz is still blocked by May, oil could easily repass $200 a barrel. And if you actually think about it, that's not just doom-mongering. Even though the G7 discussed releasing strategic petroleum reserve today and causing oil to nosedive this afternoon and wipe out half its intraday gains, the G7's mood is like putting a band-aid on a bullet wound because the underlying macro logic for this oil rally has completely changed. A lot of people naively think that once the strait reopens, oil prices would just revert back to normal. Dead wrong. Once crude is pumped out of the ground, it has to be immediately loaded onto tankers. If the strait is blocked, those massive Middle Eastern storage hubs will literally burst at the seams within like 20 days. You might say, just shut the wheels. Please, this isn't like turning off a faucet. Once the well is forced to shut down due to pressure imbalances, restarting it takes at least 6 months. It might even be permanently destroyed due to reservoirs damage. That's why the current signals are incredibly dangerous. Iraq and Qatar have already announced preemptive production costs. This exact issue is why. This incoming supply side shock is going to squeeze oil prices even higher. And what happens next? Okay, let's just look back at the 1973 oil crisis. After the embargo hit, prices didn't spike immediately. It was 6 to 8 weeks later. And when inventories hit critical levels, that oil went parabolic, ripping from $3 to $11.65 a barrel. That triggered a decade of inflation in the US, averaging 8.7%. And also the S&P 500 crashed about 45% between 1973 and 1974. And what about gold? Well, in early 1973, it was shopping around $65. And as the crisis exploded and inflation spiraled out of control, gold smashed through $180 by the end of 1974. So, using history as our guide, how does the market play out from here? Remember this, oil is the root of inflation. Every asset that relies on a low interest rate environment like AI tech stocks could be facing a brutal capitulation. Japan and Korea nuked today, and Nvidia dumped to $175 in the pre-market. At this rate, Trump will likely fold and eat a tackle this week. But the problem is, when you blow a hole this big, it's not easily to fix. Plus, Iran just announced a new leader. There's no easy off-ramp from them either. So oil might see a short-term pullback on some bullish headline, but the macro probability is that it keeps reaping higher. Looking at EBC Market Buzz, the sentiment on oil has shifted into emotional, euphoric bullishness. They aren't trading supply and demand anymore. They are trading pure panic. Oil volatility is insane right now. If you're on leverage, don't try to be a hero and catch the top. Use hard stops and manage your position sizing. And well, for spot holders, if you buy into a macro thesis, just hold. Don't sweat the short-term drawdowns. I actually loaded up a beat myself because I'm honestly not that optimistic about current situation. But as always, this is just my personal macro analysis, not financial advice. Oil markets are risky. Trade safe.